Okay, everybody, it's me, Gregory Mannarino. It is Tuesday, August 3rd, 2021. Yes, I know, I said July yesterday in my post-market wrap-up. You know what? My brain just kind of reverted back to last month. Anyway, people, let's talk. Let's start off yet again, and I hate to do this, with yet another round of bad economic news. Well, it's being reported now, surprisingly enough, no, that hiring is slowing. People, look, you know this. If you've been following anything real, it just doesn't stop. We continue to get round after round after round of bad economic news, and there's no end in sight here. And what does it mean? It means the Fed's going to continue to buy it all. Look, the mechanism here is very, very simple. You know that. Nothing is what it seems. Nothing is real. We are involved, or this entire thing around us is a criminal enterprise, the Federal Reserve, on a mission, well, to buy it all, to be the lender and buyer of last resort, something they have planned on since their inception. I want you all to understand that what we're seeing right now, these wheels have been put in place, well, over a century ago. The goal here of the Federal Reserve, the creation of the Federal Reserve, was to one day own it all, was to one day be the lender and buyer of last resort. In other words, to become the government in a backdoor fashion, and that's exactly what we have here. Anyway, so the situation here is dire. There's no doubt about it. Our economy is in collapse. The bad economic news doesn't stop. The Fed will continue to use the reports on bad economic news to move goalposts, to continue to, issue debt through one door, buy it back through another door, hyperinflate the debt market, hyperinflate their balance sheet, and hyperinflate the stock market, because what this is a wealth transfer effect and an elimination. It's an extermination process here to get rid of the middle class, to create that feudal system I have warned would come from a decade ago. The mechanism here to get this all going, the scamdemic, you all know that. They want to see yet again what they can get away with. Look what they're doing right now, people. I don't want to talk too much about this. You know why, okay? If you've been following my work, they don't process these videos. They don't want people to hear this stuff. You must, step in line and march to the slaughter like the sheep that they think you are. I know you are not a sheep. You're a lion if you follow my work, regardless, as if you are a trader or not, or a participant in this market. And I think most of you out here are at least stackers of precious metals, betting against the debt, becoming your own central bank, seeing through the thing that's around us. It's a horrible thing. It really, really is. Anyway, let's go back to this market. So on the back of this news here that hiring is slowing, stock futures are higher, pointing towards a higher open for the market, but it's a very bad setup for the market. Very bad. You got the 10-year yield 1.17, so that's coming down. That means cash is making its way into the debt market. That's not a great sign for the stock market. You got crude oil remaining under pressure. There's 2 of the 4 keys to this market that are already not good. So you need these 4 keys now, not just the 3, 4. 4 meaning what? 10-year yield, more than likely number 1, being stable or moving higher. Okay, it's not. Okay, it's not stable. It's become unstable now, falling. The dollar index or the Dixie, you need this moving lower. Actually, it's slightly lower right now. You need crude oil being propped up. And the 4th element here, okay, there are 4 elements now, is the Federal Reserve's balance sheet continuing to balloon. Well, that is happening, but we're missing a couple of pieces here. So it's not a great setup for the market today. So what does that mean? In the face of day after day, pretty much, of bad economic news, doesn't matter. There is no connection whatsoever between the stock market and the economy. The stock market is going to continue to inflate with the Fed's balance sheet. Again, why? To transfer wealth. This is grand theft on an epic, epic scale. Suppressed rates now for, well, since the 2008 meltdown have robbed, well, the middle class or anyone with an interest earning account blind, only to foster this wealth transfer by robbing people from earning interest on their interest earning accounts. Like I said, even if you have a high yield savings account, you're being robbed blind. You're not earning a real rate of return on your money, your cash, to keep up with the rate of inflation. The Fed has admitted over and over again recently that they are well above, that's their words, well above their 2% target. It's insane. And a high yield savings account is paying about 0.4% per year. It's insane. It's grand theft. And it has inflated a debt bubble, stock market bubble, enriching the 1%ers, the 2%ers, at the expense of everyone else. You think this is by accident? You really, really do? Anyway, gold and silver are under pressure right now. Cryptos are under pressure now as well. All right, whatever, people. I'm going to tell you once again here, when you see this, the 10-year yield diving like this, the entire yield curve flattening out, okay, you should not be surprised to hear the continuing rounds of bad economic news. The flattening out yield curve is a screaming signal that our economy is in free fall, okay? It's in free fall, and the Fed's going to continue to print and print and print. The Fed's going to be called upon to do something by a do-nothing fake government, trillions of dollars in more debt. Where do you want to be when you know for a fact that trillions of dollars are going to be created magically out of thin air, devaluing the dollar? We have money velocity here at historic lows. I covered this yesterday. I showed you the chart. Our economy is collapsing. You can't know that. Could you imagine, for example, if one of the mainstream financial channels were to show people the money velocity, the rate at which cash is moving through our economy, near historic lows? Meanwhile, we're having historic inflation. Could you imagine what's going to end up happening when this flips around? And I'm telling you, we're going to start to see the money velocity kick up in a big way when the debt market sells off. When the debt market sells off, and it will, you're going to see that 10-year yield spike, which is going to put a massive amount of pressure on the stock market. All this cash is just going to move. It's going to move into commodities. So with regard to inflation, you haven't seen anything yet. You could expect hyperinflation. And some people could argue we have hyperinflation now. But like more than anyone could ever conceive at this particular time. And the Fed is going to allow this to happen by design, people. Nothing is what it seems. Look around you and take it all in and realize what is going on. A plan, a process that has been in place for over a century. And they're going to use every mechanism possible to fulfill their goal, their end game. It's unbelievable, people. It's really unbelievable. All right, look, this guy here loves all of you a lot. I mean that with all my heart. And another big thank you to those of you who support my work. I really count on you. All right, I'm out of here. I'll see all of you at the end of the day, and we'll sum it up.